Good morning, ladies and gents. How are we all doing? I hope we're all good. So, top of the morning, I'm just going to start with C1 just because when I close my chart, we're right on it. If you notice from this high yesterday, we've got this order block which I had marked. If you just extend it into the future, you will realize that price is actually reacting off that order block. For now, it looks like it's a short-term sell. So if you're on charts now, I think assuming you guys already took the trade, because this is our go-to setups, like an order block which is broken, then retested. It's just like a simple setup which we usually use. So let me just quickly, I'm just on my phone. I just noticed B1 might also have a little something. So let me just quickly. Okay, all right. So I'm just going to make this price point exact. So this order block is at 5813. You can see that's where price is reacting. So you could have attacked this with the sell limit. So usually on a normal day, what happens is, again, this is a side note. What usually happens is on a normal day, price will create like a highest high. Then they'll have an order block. Then they'll break. Then they'll retest it on that same day. It can be one touch and a drop. It can be two touches and a drop. But sometimes price will run. Then they'll actually retest the order block on the following day. But again, so that you don't get confused, if you look at our model, remember our safe sells are always below the 13 EMA on each one. So just know that if you're selling this is an LSL. So this is whereby if you're actually taking the trade, you should actually just have one position. That's number one. Number two, we're actually trading against the trend because this price was pushing up. Because if you notice from yesterday, or from Sunday rather, where the week opens for synthetics, this was the price action on Sunday. Then yesterday we had an impulsive move. So this can actually be a retracement for a possible continuation up. That's also possible. So I just wanted to highlight that you should just be in mind. Don't just sell blindly. Sell according to the market structure or according to the higher time frame view which you'll be having for that particular asset. So in order for us to do proper multi-time frame analysis, we're going to come back to this just now. But if you have a runner, that's perfect. What's your target? Your target is basically today's open price or the 50 EMA. So this should give about 30 pips. So 30 pips, nothing wrong with that. 20 pips, nothing wrong with that. TDI is trading on the top and on the bottom, almost like half and half. So that shows that as much as the trend can continue pushing up, price could actually be forming a range, but it will only be confirmed if price comes and hits this, then pulls back up and hits this, comes back down and hits this. That will be a confirmed range. But for now, we're just working with what could possibly happen. So right now, we're just taking a runner, one position here, and we are targeting this level for now. So let's jump to B1000. B1000 yesterday. So with this setups or with this analysis, I'm just going to be touching on what we spoke about the previous day and what we're expecting today, just to keep it simple. And today's session is going to be quick as well. So, okay, just give me a moment. Let me just quickly. Okay, I'm back. Sorry about that. All right. So yesterday we were anticipating a bullish move on B1000. We had 38.2 marked, or rather we had the fib marked. And when we were having our analysis, price was coming towards the 38.2. And we were saying all these levels here are points of interest. So wherever price stops and rejects and gives us something familiar, we execute. So if we were to jump to M15, although I was using the M30 yesterday for reference, what I want to show you is if you're using moving averages, you can see price came and hit the 200 EMA. This is BTMM moving averages. It's also something you can search on YouTube. In case I do not explain it in a way you understand, you can just search BTMM videos. The original guy who created this, or the originator of this strategy, is Steve Mauro. So all credit goes to him. So if you want to look at this by yourself, maybe in a better way, which is explained in a different way, you can just check this on YouTube. I'm sure that will help. So the price bounced off the 200 EMA. Number one, we had a shark fin here after this candlestick closed. So I was just paying attention to this level, and we started executing a buy here. We scaled in, price pushed up, we waited for a pullback, scaled in. And usually if you're using a fib, again, a side note, always scale out at the 0.0 level. As much as you say price can potentially push up, yes, we want price to go to TP1. Yes, we want price to go to TP2. But are you not happy with 100 pips? Are you not happy with 100 pips? And this is strictly for day trading. I'm a day trader, so all my setups, I'll never share something for swing trading. All my setups are just based on a day trading model. So from about anywhere in here, wherever you would have entered, you actually would have taken 100 pips back to the current day's high. So from here to this level here, that's 117, to the highest high, that's 150. So if you can catch 50 to 100 pips, you call it a day. So that was a success. So I'm going to remove the fib. I'm going to look at today's price action. First, we check the daily candle. So on the daily candle, you can see that yesterday eventually ended up being actually like a reversal type day. We got a doji candle. So right now, we do not have a bias showing us that we are actually bullish. Price for me looks like it's sideways. So we can trade it either way. So if price is showing a bias, or if price is not showing a bias, I always say the best thing is jump to your H1, wait for your price to come above the 13 EMA. So even yesterday, you could have waited for this. Now we're above, then you look for your pattern in here. So same applies here. We've got a lower low. We do have an order block here, and we do have the 13 EMA here. So if I'm going to be looking for buys here, I want to actually take a trade after price closes above the 13 EMA for a confirmation of a directional bias for the particular day I'm trading. So if you're looking at B1000 today for buys, I would say for me personally, I'm waiting for price to actually come above the 13 EMA, because remember the daily has no bias. This is not a bullish day. Number one, it will only become bullish if the current candlestick turns bullish or turns green. That's when it will be actively a bullish bias. But for now, we just we look at the charts candle for candle, we wait for a confirmation for a bullish move before we execute. Otherwise, this price could actually just continue pushing down. So we'll just be looking at it. If they extend the lows, for example, let's say they continue coming down, the next point of interest will most likely be around this area. We also have this level, which was broken. It looks like that's where price actually is. So we do have multiple points of interest where price can actually get to before we get a buy. So you can see here we hit a sniper touch. Are we going up? Price hasn't shown us that yet. So the only thing we can do is wait. So I'll say today on B1000, my point of interest is this one, number one. Number two is this gray zone, is we can have like a W pattern, and still I'll only buy after we come above the 13 EMA. So that's the second point of interest. Then the third point of interest will be anywhere around this zone. That's where I'll be looking to execute. So if price does not give me any of the things I'm looking forward to, it means I do not have a setup. So that's it for B1000. Jumping to B5. B5 yesterday, I remember when we had the Zoom, we had one runner. But at the same time, if you go back to yesterday's session, I mentioned that, okay, we do have one runner during the Zoom. Price can go up, yes. But always be open to see price maybe taking out liquidity here, or actually taking out the day's lows, or respecting something on the left-hand side, which we can use. So price ended up giving a very deep retracement. We created a new low, but in doing so, again, we bounced on the 200 EMA. Same applies to the setup on B1000. Same thing. And we also had a breaker. So we had the lowest low, we had an order block here. You could have used this as an order block. You can still use this as an order block because this whole zone, I believe, is valid. So as soon as you get a break of the order block, you can execute one position. And like I said, sometimes price will push, bounce on the order block, then go up. Sometimes they push, give two bounces, then push up. Sometimes they'll just run. Then maybe they'll retest that same level on the next day. Those are all possibilities. So we only trade what we see. So B500 yesterday, I didn't execute, but I'm assuming somebody managed to execute. For those who follow BTMM, this is the setup which they call shark fin. Shark fin, why? Shark fin hold the mayo. So I'm just going to quickly explain the terms. So shark fin, it's a TDI thing. It's just when TDI comes outside the bands and creates like a quick 10. So for me, this was valid as a shark fin, even though it was inside the bands. If you understand TDI, again, you know that this is one leg outside, one leg inside. It's coming with confluences, confirming something which we are seeing on the chart. So soon as things line up, you execute. So this shark fin hold the Mayo. Steve, like I said, calls the Mayo, the 200. All these moving averages have got names. The red EMA, which is the 13 exponential moving average. This is called the catch-up. The 50 EMA, it's called the aqua. No, he calls it the water, sorry. He calls it the water. Then the reason he calls it the water, I think on his charts, the 50 EMA is white, if I'm not mistaken. I stand to be corrected if I'm wrong, but he calls it the water. Then the 200 EMA is called the Mayo, or vice versa. I might get the descriptions wrong, but these are the names. The 200 is the Mayo and the 800 is the bluebell. So shark fin, hold the Mayo. It just means the Mayo or the 200 is holding the price. It's acting as a dynamic support. So if the terminology is confusing you, you can still refer back to Steve's lessons, and you guys can understand this a little bit better. So price ended up playing out clean 100 pips. This was the 12th of August. Just to quickly show you that these patterns repeat. As I was backtesting again, I also realized that, okay, this same pattern also occurred on the 22nd of July. So this is a variation of the same pattern. We've got one leg inside, one leg outside the band, one leg inside the band on TDI. When I say bands, these are the bands, the volatility bands, these two lines. Those are the volatility bands. So one leg inside, one leg outside. Just a variation, but again, you can see here price was held by the Mayo. Lowest low order block, we got a break. Eventually, price pushed up, went sideways a bit. Then again, we had that good push up. So these patterns are something which actually repeats. So yesterday was a good trade. I did not execute on this, but I thought, let me just touch on it. So looking at it today, again, we're looking forward for price to actually get to the top here. But if you notice on the daily, like I said, this bullish momentum now, it's like an impulsive leg, right? So we do have possibilities that price can still retrace, maybe try to interact with the 13 EMA, or just give some form of retracement. So for now, the candlestick is not yet bullish, but I would consider taking buys if price bounces off. So right now you can see we're bouncing off. Let me zoom in. We are bouncing off, or we are in the vicinity of yesterday's highs. So this is yesterday's highs. So if price comes back above here, I might maybe could wait for maybe like a W pattern for me to actually execute, because this could be an early entry, but sometimes price will just push, right? So I'll just wait again for H1 to come back about the 13 EMA for me to actually execute a buy. If we do come a little bit lower, price might still be coming to this particular level, because remember, we're talking about market structure. So there's a lot of terminologies I use. If you guys are confused, or if you need better explanations, you can still consider joining the paid mentorship so that I can get deeper with you into these into these explanations and stuff. So you can see this is a impulsive move, a retracement, impulsive move. So again, price can still give a deeper retracement. They can still come even to this level, which makes this a point of interest for me. Then number two, if price comes back above here, maybe creates a W, then I'll still consider taking a buy. So that'll be point of interest number two for me. For now, I'll say that's all I'm looking at. If price violates this, maybe comes down, I'll look at something else. But for now, I would say I'm waiting for a pattern here to form based on the previous day's high. If you notice, we also have this order block there. So that's a point of interest for me. The only thing I need to see is a pattern. Then again, we might come to this broken zone and bounce off. Again, I would love to see a pattern or something showing me that we're actually pushing up. What I mean by that is if you're on H1, if you struggle, just make sure H1 is your best time frame. Wait for reversal candles to show you that price is actually pushing up. Then you execute your trade. Do not take your trade at the top where price is actually moved. Try to wait for the retracement so that you can get the best price entry points. If you get an impulsive move, sometimes you wait for an impulsive move. So from this low to this high, this is yesterday, you can see price came and bounced off the 38.2 fib retracement. You could have also taken this trade towards midnight, depending with your time zone, and you could still have taken this particular buy instead of this one. So it's all a matter of patience and trading only what you understand. So I'd say that's it for me for B 500. It's patience for this one. B1000 same applies. We're patiently waiting. C300 gave a sweet setup. Okay, just a moment, guys, please. Pardon me. Let me just need to sort something out quickly. Please be with me. All right, sorry about that. So, right, back to C300. Yesterday, we had a nice setup. We shared this. I think yesterday I shared B1, I shared C3, and I shared C500 in the Telegram group. Because remember, of all these setups I'm talking about, you only need to catch one each day. Only need to catch one. So yesterday, you can see there's this red line here. I saw price was pushing down. Initially, when we were having the Zoom, I actually would have waited for price to come to the top of the range. If you watch yesterday's session, we were talking about this range here. But what I realized is, remember, if I'm looking at a setup and I feel something is going to happen, I'm actively stalking on the setup, waiting for it to form or waiting for something familiar. So what ended up happening is I realized that, okay, this price, where it is, I think the time we had Zoom, price was somewhere up here. Then at some point, I saw this close below the 30 and I was like, you know what? I've had an impulsive move here. Let me see. Can I not run a fib and see if I cannot get something? So you could have run your fib from this high to this low, number one, price reaction on the 50 level, or you could have run it from the highest high to the 50, still price touched the 50. So it's more or less the same thing. So somebody might ask, which levels do I use? If you want to run a fib, what you want to do is you want to mark the highest high which broke a structure. So that's why I was saying you could have used this because this was also a structure which was then broken by an impulsive move. So you want to mark the highest high to the lowest low, drag your fib, then just wait for the retracement, wait for price action, execute. Sometimes price will create an M pattern. That's something you should be open for. So I remember when I shared this setup, I also mentioned that price would most likely retrace to 38, 80, and that level should be left open for a possible sell limit. But the thing is, price didn't retrace to that level, it just dropped. So if you're in this trade from current market price, I'm sure you caught it, and we were targeting this red line on the bottom. As you can see on this arrow here, that's when I share the group. I'm just shared to the group. I'm just going to remove it. So based on H1, the entry was clean. TDI, we had a 50 static bounce. We also had a baseline bounce. So if you had missed the first impulsive move, again, you could have run a fib on this impulsive move. And again, price came, bounced off the 50 level with a nice hammer or whatever you call this candlestick, a pin bar or whatever you call it, right on the 50 level. So you could have taken one, sell there. If you wanted price to come below the 13, you could still have entered another sell there, and you could have still have collected nice pips. So remember, you scale out at 0.0, which is right here. Sometimes price will hit here, then they will do something else. But from here to here, it's actually a good number of pips. From this level to this, you can see it was about what 130 pips which is actually a lot for C3, sorry. So that was yesterday's setup. What am I looking for today? Today, I would say, okay, prices come below my red line. Two things can happen from yesterday's analysis. If you didn't watch it, please do. Price might still come bounce off here, continue pushing down. That's the general idea of what could potentially happen. Since I've got an impulsive move, I can still run a fib. So if you notice that if price does retrace my points of interest, which is the 38.2, the 50.0, they are lining up with yesterday's low number one. They're also lining up with this broken zone from a higher time frame. So if we jump to H4, you will notice that price will most likely get maybe to TP1 since we've got the 800 EMA there, which is the blueberry. But at the same time, I just want to wait for a bit of a deeper or wait for a retracement generally. So if a retracement does come and I get something anyway in my point of interest, I will execute. That's point of interest number one. Point of interest number two will just be this level. Sometimes price will come create equal highs. So we've got this high and we've got this level where price can still come tap into. So that will be point of interest number two. So for now, I'll say those are my only points of interest. If price decides to do something else, then I'm not participating. If let's say this candle becomes bearish, that means it's a miss. Remember, you're waiting for something familiar. You're waiting for a familiar pattern which you understand. You're waiting for candlesticks which you understand before you execute. So no setup, no trade. So that's it for C3. We're going to just leave this fib on and wait for price to retrace into that area. C1000, like I said, looks like we're bouncing off the OB, which was broken on M15. Yesterday was bullish. Let's start there. Yesterday was a bullish day. You can see on the daily candles. So even today, if you actually look at this, price can potentially push up. TDI is bouncing off the 50 static. So we are actually open to seeing this price push up. So on the daily, again, you'll notice that what we have an imbalance somewhere. I'm actually looking for, okay, we've got an imbalance right here. So this is where price again can potentially come into before we sell. So for now, I'll say the daily for me, it looks bullish. I will, however, consider sells if the current daily candle turns bearish. Yesterday, this was an advanced sell whereby price sells on a bullish day. They will give that intraday retracement. So sometimes you might miss it. There's nothing wrong with that. Today, price bounced off the order block. So yes, there is chances we could push down. This could turn into a bearish day. But what do we need to see before we actually say this trend is bearish? What we want to see is price actually coming below this level or below the 50 EMA. Then that will be a confirmed sell intraday for today. If we do get there, that's a confirmed sell. But here we do have one runner based on the order block, and we are using the next zone or the next order block as a TP. Why are we using it as a TP? Because price can continue pushing up. But if we do break, so we're going to close our trade, wait for the impulsive move, wait for the retracement, then we're going to take sells coming back to these lows. That's if we break this order block. You see here, that's if we come below the 50 EMA, and also prices to be trading below the 13 EMA on H1 for a safe sell. So remember, again, we could have sold here, but the safe sell is always here. You can always catch some nice pips coming back to the 50 EMA. Side note, if you're trading towards the moving averages, always scale out right on the moving averages, because remember, moving averages, they act as a dynamic support. Price can hit here and push up. As you can see, they hit again, they pushed up. So they can still come back, hit again, and push up. That's why we are taking profit on that area. So we only have one runner on C1000 short-term trade. Then CCC 500, the last asset. What do we have on C500? Yesterday, we were looking, when we had our Zoom, I think price was here. I saw this price action. I advised one sell with a tight stop loss, and we were still open for this order block, which was created by this high to be retested. So we had a sell limit, or rather a point of interest for a sell limit on this level. which remain valid for the rest of the day. But what you notice is that runner we had, it still played out. We had a TP right there. If you're in the Telegram group, you should have seen this. So if you had missed this impulsive move, you would have noticed that price still came, created a little M with a nice candlestick pattern here. So you could have still entered a sell, maybe targeting these lows. But if you notice, price failed to get there. So again, if you take a trade, there's no guarantee price will get to your TP. That's why I always say, if you're trading boom and crash, be happy with taking 30 pips. Be happy with taking 20 pips even sometimes, because there's no guarantee your price will get to your TP. But at the same time, if you check on our pinned message in the Telegram group, it will say any successful setup is a setup which pays you a minimum of 30 pips. That's right. That right there is a success. The only thing you need to increase is your lot size. So get consistent with small lots, start increasing, cash 30 pips daily until you can take this with 50 lots, which I believe is the biggest lot size on C5. If you're full margin on C5, I think they allow you to open 250 lots. That's the max. So just be comfortable making that, because if your account grows, then you're able to size up to this level. Just know that 30 pips, it's a guaranteed 1,500 on one position. So again, it starts small. You're going to start with 0.20 times 30 pips. This gives you $6. If you're able to do this consistently, 0.20 times one position, 666, your account grows. You're going to add lot size to 0.3, 0.4, 0.5 until you get to a standard lot size, and so on and so on. So a chance to sell, a chance to sell. So for me, I would say this OB is still valid, but I want you to notice something. If you look to the left, do you notice that on this day's low, this was Sunday, on Sunday's lows, right? Sunday's lows, price actually came and touched that same area. So these are some of the little things you just need to mark out on your charts. Because if you see a reaction on a previous level, just know that price is a probability or a high probability of playing out on that area, as long as you are trading in line with the bias. So daily bias, what do we have? Daily bias yesterday, we ended up having a sell even though we're on top of the 13 EMA. So again, like I say, always trade what the price is showing you, not what you want the price to do. So two things can happen here. You will notice I've got this order block waiting on the daily chart for a bit of a longer term view. I also have this like channel or trend line on top where price actually looks like it's respecting. At the same time, price is bouncing off the 13, the 50, the 200, which is a dynamic support. So price can still push up. At the same time, if we do break, we'll consider sells. And after we break this level with a nice close, then we'll be in a bearish order flow and we'll simply be looking for sells for a couple of days. We'll actually be looking for something like this. So it's a selling day, selling day, selling day. That's the reason why we're marking the chart. So again, from this high, you notice that we had this order block. We broke nicely, came back to retest. Then we started having sell momentum, sell, 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 sell. If you're using this as your order block, same applies. We broke, came back, same level basically. So that's the same thing we're waiting for here. So if that happens, we know what to do. So for now, we're still waiting for more confirmations. I would say this price can go either way just because we are right on some higher time frame dynamic support. So chances are we could go bullish. But at the same time, we can still get some nice sells. We're actually trading below the 13 EMA, which actually interests me or actually entices me to still look for a possible sell. So what are my points of interest here? We do have an M pattern on the M15 intraday. We do have a broken order block here where price can simply come back and retest. So I'll say for now, that's my point of interest number one. I still want to get a bit of retracement, maybe again back into this area, or price can actually come touch this level again to give like 3 legs, right, before we get a sell pattern. So if we do get that sell pattern happening on any of these areas, we can execute. From this point, I'll say maybe if we can get a nice drop again, I'll still wait for a retracement back into this level here before I consider a short-term sell. Why I'm saying it's short-term is because on the daily, we are sitting on major dynamic support zones. We have the 13, the 50, the 200, right on the excuse me, on the same level where price can still bounce and actually push up. So for now, the sell is short term. If we come back either here, or if we break and retest, these are my 3 points of interest for sells today. Anything else will be a different setup. And if I see something else, if I'm online on Telegram, I'll still advise. So these days, I try not to give an exact price line because people were getting lazy. They were just waiting for you to send a signal. Okay, right now we need to close. They were waiting for you to send a signal with an exact price. For example, let's say sell limit at 43.17. And they just take the trade TP. People are not learning, they're not studying, they're not putting in time. So what I'm doing now is I'll just give you points of interest. It's now up to you to execute your trade. If you see something familiar, I believe that's only fair, is it will help you guys in your learning as well or in your trading journey. So if I give you points of interest, at least you know what you're looking for. And you simply have to wait for that particular thing. If you don't see anything familiar, you do not execute. Do not rush into selling without confirmations, because right now, this is already an impulsive leg. Yes, they could continue dropping, but is there a pattern? For me, no. So what I want to see is a solid close, maybe a retest here. Then I can consider a short-term sell targeting yesterday's lows. So always have a plan. Know what happened yesterday. Know what's happening today. Have a point of interest, wait for a pattern, have an exit. If you have those things in check, execute your trade. So if you need more in-depth knowledge or how I then decipher my entries and things like that, then you simply either have to hit me up on Telegram for a one-on-one. Usually, depending with how serious you are, if you just need help, I can help you for free, but you can always subscribe onto the premium mentorship. That's number one. So the premium mentorship, I think, if I'm not mistaken, the prices are on the Telegram group, but I think the mentorship is running at $228 for unlimited one-on-one notes, sessions, live trading, everything you need within a month. That's the fee. Then if you want the synthetics cost, Bowman-Class and other volatility indices, that will cost you about, okay, I still have to confirm these prices, but I think it's 188 on a monthly basis. This is for the synthetics course. It includes other VIX, the volatility indices, which is the 10, 20, 50, 200s, and the rest of them. I just don't put them here because I don't trade them. But if you need help with them, we can jump into the full course for 188. Then the mentorship is going for 228. So this is today's analysis. Everything which happens in terms of signals today, it comes from what I've just explained from all the assets we're looking at. So that's it for me today. I think we might jump onto New York session again. All these sessions are free. You only have to join when I am doing my analysis. You can ask as many questions as you like as we are doing live analysis like this. You can ask as many questions as you want when we are doing live trading. All this is for free. The only thing you need to pay for if you want to is mentorship or the synthetic course. Otherwise, everything else is free. We stopped doing investments. We stopped doing account management. So it's only mentorship and the synthetic indices course. That's all we're offering at the moment. Probably maybe for the next 3 months or until the year ends, that's what we'll be offering. So thank you so much for joining. If you watched until the end, I hope you took some notes on all the side notes which I was mentioning. If you need me to do a TDI in-depth video, I can try to do it just talking about the TDI, what to look for in terms of confirmation. That's the indicator I use on the bottom here. And the strategy I use to trade is BTMM, Beat the Market Makers by Steve Mauro. You also hear me talk about some ICT concepts like your fair value gaps, so yeah, that's it for me today. If I have something and if I'm on Telegram, I will share when I'm actually executing the trades. So if you watched until this far, thank you so much. I hope you took something from today's session. And if you haven't subscribed yet to the channel, please kindly subscribe. Much appreciation to everybody who's subscribed so far. We hit 1K subscribers, I think, a couple of days ago. So much appreciated. The next milestone is 10K. So don't forget to subscribe, like, share, comment. If this material is helpful, just share it with a friend and let's grow the community. Otherwise, we can still chat on Telegram. The group is open for discussions. If you need help through the group, I'm always free. If I'm online, I'm always free to help. So thank you so much for joining. If you watched until the end, enjoy the rest of the day. Good trading.